welcome back to another episode of Web3 with Whitney, a daily episode or a daily series is what I meant to say about Web3. And today is day 14, which means I've been doing this for 2 weeks. And I am excited to talk about today. Gosh, I'm just fumbling through my words. Honestly, it's because I get a little nervous every time I do these videos. Even after doing something 14 times in a row, it still gives me not goosebumps, but like butterflies in my stomach. It reminds me of how I feel when I go to speak in person on a stage. Even though I'm very comfortable speaking on stage, I get incredibly nervous and it takes me some time to ease into it. So I'm very grateful for those of you that have tuned in. I think part of the insecurity I feel sometimes is that the first 10 days or so of the series were really up and down and all over the place. And I just realized my phone is not on do not disturb. So let me put that in that mode so I can focus on without getting disturbed. So yeah, that there were so many tech issues, and I've almost gotten to the bottom of all of them. Number one was my microphone. The cord itself was not working, even though it's only 2 months old, and I have not used the cord a ton of times yet. And then the other is my internet connection, which is not a huge surprise, but it's just going to take some more investigating to figure it out. And yeah, that's the behind the scenes of all of this. If you are brand new to this series and you haven't listened to the episodes, you don't really have much context for it, I want to point you to my website, which has everything in one place. It's whitneylauritsen.com/web3. And on that page, there are links to every platform I broadcast live. So if you're interested in being here live, you want to ask questions, you want to make this more interactive, go pick the platform of your choice, including TikTok, which I really love going live on. And there's also a question and topic request section on here. If you don't want to be there live, you can't be there live, you miss it, you can submit that to me in advance and I'll make sure to take that into account to best of my abilities. And then all of the previous episodes are in a YouTube playlist, plus they're on the audio only podcast, which is a private podcast that I created just to make it easy for those that want to listen to this. And last but not least, I've been considering and working on a Discord community. There's a section on the website that, quote, links to it. It really just links to my Rally creator page where the coin is, and a little update on that for those that are holding Rally. My coin on Rally, which is called the Well coin, or thinking about it, it's up a little bit today. It's 16 cents or one, how do I even say this? 16 and a half cents, I guess is how I would say, which doesn't sound like a lot. But as we're going to talk about today, just how the cryptocurrency market works and stock market works. This is up. So any increase is always a good one, and all is relative to how much you have. Plus, if you heard about in previous episodes, you do earn weekly rewards, and there are ways for you to redeem the coins for actual utility and lots of benefits here. Yeah, that's the behind the scenes of everything going on with Rally and me. So now in terms of today's subject matter, which as the title says, is about the difference between cryptocurrency and the stock market. I'm not an expert in either. I'm also not a financial expert. My aim here is not to advise you on how you spend your money, but help you better understand it. This was something that I felt confused by. I've always kind of felt confused about the stock market. I remember learning about it when I was in school, like probably 10 years old or something, if I were to guess, maybe a little older. There was like our teachers at my school were trying to help us better understand and prepare for what stock investing meant. And I wish I could go back in time and pay more attention and take it more seriously, but I just wasn't naturally interested in it. And my mom actually worked in banking and has been very good about money, very savvy about it. And, my father to an extent as well. So somehow my ignorance persisted, and I've really had to teach myself more about this. So as I talk about it, you may hear me fumbling through it, but I'm also trying to use the beginner's mind and not speak over anyone's head. And I feel the same way about cryptocurrency. So the aim of this series is to learn about this together. If you ever leave a comment or participate live and you have questions or even perspective and knowledge that you want to share, please do, because I really mean it when I say that we're in this together and I want to hear your questions, but also your wisdom as well. So I've got a document pulled up on my Notion that I'm going to go through here today based on a few different articles that I read that gave me a lot of perspective about the difference between cryptocurrency and the stock market. I'm going to link to the articles in all the recordings of this if you want to go reference it. So let's just start at the beginning and get into it. So, cryptocurrency exchanges and stock exchanges have one thing in common. I think I got this information from cointree.com, which is that they facilitate trade. However, the way the assets are traded and the volatility of the market, as well as a number of other factors, are where the two types of exchanges differ. So, stock markets and their shares represent equity in a company. And this is something that a lot of people bring up when they're kind of skeptical about cryptocurrency, and that makes sense. A stock is an ownership interest in a business backed by the company's assets and their cash flow, whereas cryptocurrency, in most cases, is not backed by anything at all. And I think that's why a lot of people are skeptical and unsure about it, and it makes them nervous. But hopefully by the end of this, it'll broaden your horizons. And my aim here is not to convince you to buy cryptocurrency. It's really just to lay it all out for you so it makes more sense. And stocks are made for a very simple reason, which is fundraising for companies that need the money. I always get pretty excited about investing in companies that I believe in. I've taken a pretty cautious approach to stock investing, although I have had stock benefits at some pretty amazing companies that I've worked for. One of them has been Apple. And I really think that is luck. I remember when I worked at Apple, I also felt very ignorant. And when I first got there, they said, okay, you can set up your stocks. And I was like, do I really want to put a percentage of my paycheck to stock investing? Now, this is many years ago. And of course, in hindsight, I wish I had put a lot more into it. But at the time, I was being very cautious about how I spent my money. And I still have continued to be. My risk tolerance have just gone up a little bit more, which I think is a very commonplace thing, right? So, had I known what I know now, I would have put a lot more in. I would have a lot of money. Now, luckily, I slowly started to put a percentage of my paycheck into the stock. And now I still hold a bunch of it, and it's part of my retirement plan. And I've tried to think about other stock investing as well as cryptocurrency purchases similarly, right? It's thinking about the future is what could this possibly mean? And of course, there's a risk involved on both sides of it. But some people just feel a little bit more comfortable with an established company like Apple. But if you really watch the stock market, of course, you're going to see it go up and down. And, there's so many factors as I'm going to get into today. Another stock that I took a risk on and ended up benefiting me was Tesla. At the time, I just like put in some money that I felt comfortable with, and it went skyrocketed. I got it split a few times, so I just had more shares, and that's been really exciting. But that was a big risk. Other purchases that I've made that I probably won't name the companies, but I've bought shares in other brands that I really believed in, and they haven't done very well. And I was shocked. I was super surprised at the lack of performance. So I've noticed the same thing happening with cryptocurrency. Now, in terms of the stock market, of course, when you buy shares in a company via the stock exchange, you're essentially becoming part of the owner of the company, which is not something that I really understood. I don't know what I thought I was doing or where this money was going towards, but I didn't think about it that way. And when I do, I think it's actually really cool, especially if you're buying because of like an ethical motivation, because you believe in the momentum of something moving forward. There's something very empowering about having something at stake, right? How well the company is doing determines the value of your shares. Now, the purchase of cryptocurrency, whether it's a coin or a token, which I'm still learning the nuances between the two, that purchase does not necessarily represent partial ownership of the company that issued it. And it's digital currency, so the value of cryptocurrency is very subjective. The other thing that I think is really important to know that not everybody is aware of is the fact that anyone can make a cryptocurrency, while stocks have to be issued out by special groups. Anyone can make their own blockchain ledger, and many digital currencies like Dogecoin is a really great example. Were actually made by just programmers. In that case, like a joke coin. And I think there was a lot of skepticism around it. However, Dogecoin is the reason I got into cryptocurrency because there was so much hype around it. And it felt really fun to experiment with it. So I'm grateful. I may not make a lot of money. I think I've probably lost uh, most of it, but I don't care because that is what helped me build confidence. And that's part of my recommendation if you're thinking about getting cryptocurrency is like, what is the purpose that it's serving you and what exactly is the story behind the cryptocurrency. And I think the same thing with the stock. uh, I've lost money on stocks, as I mentioned, but I don't necessarily regret it because I knew I was taking a risk. It's similar to gambling in my head. Okay, next point. Stock exchanges have been trading far longer than cryptocurrency exchanges, and therefore they're more mature. And for some people, they may feel more trustworthy. Regulations and local laws govern stock activities, and exchanges also receive government backing. Companies must also provide transparency to shareholders by making market activity public, including quarterly financial updates and minutes of general meetings. Cryptocurrency exchanges experience greater volatility. The market is new, so its highs and lows are very pronounced, which makes the cryptocurrency marketplace vulnerable to the trade movements of what they call whale traders. A whale trader is someone who owns a large amount of Bitcoin, for example. This means that the whole market can be vulnerable to the trade decisions of those heavily invested. And there's certainly a lot of examples of this. Dogecoin is another great one. The really wealthy people making decisions can really impact other people who are purchasing. And again, as I mentioned before, you have to be mindful of the hype, right? So maybe somebody is benefiting by hyping something up and then they go and sell it, and then you're just kind of left holding on to something. So that doesn't always feel that great. Currency is not backed by assets or cash flow. The only thing moving crypto prices is speculation driven by sentiment. So cryptocurrency is driven only by the hope that someone will buy it for more in the future. And that's interesting, right? And this is where the hype comes in, and you do have to be mindful about why someone's recommending things, right? And even when I talk about my well coin on Rally, right? Like part of the motivation, it's like, hey, we're all in this together. And if we all like put in more, we'll get more out of it. And I talked a few episodes ago about is cryptocurrency and NFTs and other elements of Web3 similar to a pyramid scheme or an MLM? And for that, you need to be very mindful. And I would encourage you to buy cryptocurrencies where there does seem to be some form of transparency, right? Where you can ask questions. For instance, if you're going to buy my Wellcoin and Rally, you can always send me a message or an email and ask me whatever you want. You could ask me here on live. I'm happy to answer it and give you the biggest honesty and transparency that I possibly can. That's my commitment. You're not going to get that experience with every cryptocurrency. And given that it could be created by anyone, I would say that you need to form your own version of trust. However, because cryptocurrencies sit separate from governments and other global institutions, they are to a large extent insulated from political influences, which I think is a perk there. And as I've mentioned in other episodes about Web3, uh, there are some benefits in the equality that can come with that, in my opinion. And while cryptocurrency is independent of the stock market, some experts believe there's a strong correlation between the price of cryptocurrencies like Bitcoin and the stock market. So you may see fluctuations happening together. In fact, we've seen a lot of that happening in January 2022. And volatility makes crypto unsuited for short term investors. Crypto is better suited to traders who leave their money tied up and wait for it to recover. and this could take years. Whereas, like with the stock market, you'll see, and I guess you see this in cryptocurrency too, but you see people that are day traders, and they're really closely watching things and buying and selling, and there's a lot of risk that comes along with that, and that's where you have to evaluate your own personal risk tolerance and decide like what are you comfortable with, what are you able to do. Another pro of cryptocurrency is that it can be traded anytime and on any day, regardless of holidays and major events. I kind of like that if I'm going to be watching it. I just like checking the price sometimes. And I often will feel frustrated if I'm very curious about the shifts in a stock and only able to check it between certain hours. But I guess that's more beneficial to my curiosity than it is to a benefit beyond it financially, right? So I don't know. I don't know if that's a major pro, but it is to me. The costs associated with the stock exchange can actually be pretty high. And this is something to keep in mind too, because brokers charge a fee or commission, banks are charging you to make payments, and also capital gain taxes. Now, something I want to cover in a future episode is cryptocurrency and taxes, which I want to learn more about because I'm about to do my taxes and tax season's coming up for everybody. So it's important to be aware of your decision making. And this is not something I was actually I didn't really understand in general about stocks, right? Capital gains still don't make a lot of sense to me. And I got very nervous because a few years ago, I was kind of dependent on some of the money I was making in the stock market to pay my bills. Like there was a period of time where I wasn't getting a lot of income. And I was very grateful that I had the stocks to kind of fall back on. But then, like, I had to deal with it during the tax season. And that's still confusing to me. Luckily, I have an accountant that helps me with that. But, like, I couldn't really tell you that much. So, in the future, we'll get into taxes more as best to my abilities, given that I'm not actually a financial expert by any means. Now, lastly, I think it's important to know that right now, stocks are generally safer from fraud than crypto is, mostly because crypto is prone to fraud due to being decentralized and unregulated. And there's the potential of these exit scams, um, you know, all sorts of scandals that could go on. I mean, there's been a number of them in the news that have made people wary of them. And I think also there's the potential of being hacked because it's digital currency. So I would say around that is also to pay very close attention to what you're buying, be mindful of why you're buying it, and also make sure that you're doing everything possible to be secure. I did an episode about cryptocurrency recently. If you want to go listen to that, and mainly my tips would be like make sure that you have your seed phrases stored somewhere. And that was the main topic of the episode I did in the past. Make sure you're using two-factor authorization, and very mindful about all the different places that you're connected and where your passwords are. And also just going slowly and not rushing into it, making sure that you're mindful of any hype associated, really tuning into why you're making these decisions and who's behind them. In fact, today I saw a potential scam coming through on my end because I've been doing more and more about Web3 on platforms like Twitter. Today I saw this fake Twitter account for one of the main marketplaces, crypto.com. And it said, you've been added to crypto.com's list of official airdrop. And what caught my attention was not only like, why would crypto.com add me to a list? I guess it's possible, but probably not. And also, they spelled official wrong with like some weird spaces, and it gave me pause, and then I clicked on the username, and of course it was not an official account. Now, some people could fall for that really easily. Like some of these things may seem really obvious scams, but not everybody's going to be that savvy, especially if you're moving really quickly or if you're new to all of this. So just be careful even on social media. Twitter especially, I've noticed there's just a lot of maybe not scamming, but people trying to take advantage of other people's ignorance. And when I was brand new to crypto, which was just like 6 months or 7 months ago, um, I was trying to learn a lot through Twitter because I think that it's a great place for that. There's a lot of conversations happening around Twitter. But there's also a lot of people like trying to hype things up. And I think I actually fell for some of that hype, especially when it came to Dogecoin. But remember, I don't regret that. I put in money that I felt comfortable putting in. And this is where I would kind of leave this, and a few takeaways here. Most of these I got from the website bankrate.com that outline the difference between crypto and stocks. And three main points were: given its inherent risks, cryptocurrency works better with a small allocation in your overall investment portfolio. And in their case, they were recommending 5% or less of your portfolio. So that's something worth keeping in mind. I haven't done the math. I don't know the percentage of which I'm using cryptocurrency versus, or investing in cryptocurrency versus stock, but it's pretty minimal percentage wise. Another tip is that even a small allocation could do wonders for your portfolio if cryptocurrency really takes off. I've mentioned this before, I think in some of the earlier episodes. Right, back live. Um, so yeah, I would say that even though you might want to put a small percentage of your investment portfolio into cryptocurrency, that small amount actually could become a huge amount over time. So maybe you do want to try putting in $1, $5, $10 just to see what happens, but also plan to hold on to it for quite some time. And then lastly, Bankrate said that if crypto grows to be a more significant portion of your portfolio, you can reallocate your money to stocks to lower your portfolio's overall risk. And I thought that that was a wise thing to consider. So I'm going to link to these different resources if you want to read more about the difference between cryptocurrency and stocks. There's a ton of articles out there. As I mentioned, I'm still learning, but this really put things into perspective for me. And I've learned to feel more comfortable with cryptocurrency over time. And I think that really was just dipping my toes in by putting a little money in there and then just paying attention and reading and talking about it every day like I am now. So that's what this series is all about. I appreciate you watching. I hope you learned something. If there is something I left out, a question that I didn't get to, anything that you'd like to see in the future, please let me know. Again, you can go to whitneylauritsen.com/web3, which is linked in the description. It's linked on my profile. If you click over there, you can submit questions. You can see past videos that I've done in this series, listen to the audio only version of it. And say hi to Yadi, who's tuning in from YouTube right now. Hey Yadi, thanks for watching. Yeah, I love doing these videos. I've found them really helpful. Every day I just try to think about, what do I want to learn about Web3 today? And that's usually what I dig into. I do a little research, I put together some resources, and I show up live. I love having other people here to interact and ask questions. So I appreciate you, and I hope to see you back in the future. Again, if you go to whitneylauritsen.com/web3, the links to all the platforms are up. Right now, I'm broadcasting to 6 different platforms, but there have been some internet issues. So I've been thinking like maybe I'll limit it down just to try to rule out some of the tech issues. So if you would prefer to watch on one platform or another, any feedback you want to offer me, I want to hear it because I want to make this valuable to you. So please reach out. And until then, have a wonderful rest of your day and good luck on your journey with Web3 until we meet again. Bye.